market performed relatively well. It's been rising. Turnover also rose over yesterday's to about 442 million. I heard you mention EABL. There's been a shake-up where they're looking to have a lean management, basically to help foster their growth focus. So market performed pretty well. Safaricom and Nation Media contributed to most of the turnover for the day. Commercial sector did roughly about 60% of the total market turnover.
All right, now today the market is expecting results on a 2-year primary issue of a bond which closed yesterday. Have those results come through?
Not yet. We should have them maybe within the next, let's say, 1 hour. But we're expecting an oversubscription. It being a 2-year paper, which is attractive to commercial banks, and we're also expecting the rate to come. There was actually a poll done yesterday, where most people thought the rate would come in at a median of about 3.5. So that's where we're expecting the rate, anywhere between 3.5 to 4%.
All right, in terms of the movement on the yield curves, Kenneth, whether up or downwards, in terms of what the market was expecting, how's that going to impact on the development of the secondary market in general?
What would happen is if the rate comes in within those levels that that we're expecting, that would be good for the market. It would mean, and also if the paper is oversubscribed, it would mean a lot of players would be coming to the secondary market looking to buy, who missed out during the primary issue. And also it would also mean that, because that's currently on the secondary market, the 2-year paper is trading anywhere between 3 and 3.5%. So that would be good. That would mean the primary would come in at market levels, which would be good, considering the last 2 months, the primary issues that have gone by, the papers have been issued at anywhere up 100 to 150 basis points above market, which in turn has killed secondary market trading, with most players finding themselves underwater because they're holding the same tenor bonds at lower yields. But if this bond comes within market, it will actually really spur market trading, and we should see activity in the secondary market increase.
Okay, talking about investors being underwater, what we've seen this week is a renewed interest and improvement in the performance of bonds, from a turnover this week of about $16 million to $30 million. Why the renewed interest in the bond market? So much attention being placed recently on investments through equities.
What's happened is that with this upcoming primary and with the positive, there was actually a meeting with the central bank governor, I think sometime last week. The positive sentiment from that meeting has filtered into the market, with players expecting rates to remain stable or decline marginally. So we've seen a lot of stakeholders coming in to take up positions for underpriced papers where people really need to sell. So they've been coming in, picking papers at higher than market yields, taking up positions in preparation for what they expect to be a marginal decline in the rates.
Now, obviously, inflation is a factor, Kenneth, in terms of the attractiveness of bonds. Kenyan inflation for August year-on-year is 3.2%. Your projections for inflation going forward and the impact on the bond market?
What we expect, we expect inflation to actually rise in the month of September, because we've seen increase in food prices, in energy costs. So this should have a negative impact on the inflation levels. We should expect them to rise above 3.2%. On the market, on the short end, we might find some, especially let's say fund managers who are holding papers in their hold to maturity books. They might be posting negative returns. Although the equity market has been performing pretty well, so they might actually equal each other out.
Okay, thanks so much for coming through. Kenneth Minjire, who's a fixed income dealer at Genghis Capital, joining us from Nairobi there.